And now we will learn how to record mortgage payments that include escrow, interest, and principal. Each monthly payment includes interest expense that the bank keeps forever as a service for lending you the money, principal reduction, which reduces the amount that you actually owe at any given moment, insurance and taxes. Usually the insurance is homeowners insurance, and usually the taxes is what's called school tax or real estate taxes. And those two together are sometimes lumped into one category called escrow, which you have the option of doing in your chart of accounts if you choose. You have to decide how you want to separate or mix them in your chart of accounts. But in our example, we will keep all four of these items separate and track them separately in the expense accounts in the chart of accounts. For example, on July 1, we paid $1,000 monthly payment to the bank for the monthly mortgage that includes the following. $200 of that $1,000 payment is interest that the bank will keep forever because they did us a service by lending us the money. $100 goes into insurance, which could be lumped together in an expense called escrow expense with the $150 in taxes that are part of this monthly payment. And of course, the remainder after insurance, taxes, and interest go together as the amount that will decrease what you owe. So let's go ahead and see how to record a monthly payment of this amount that includes these items. From the main menu, click Banking, write a check. Now, the money's coming from the bank account. The date is July 1, but it's July 1 of 2017. That's the day they're paying the $1,000. They're paying it to Chase Bank, so your bank should also be listed on the vendor list. And the amount they're paying is $1,000. Now, in the bottom left of this window is how you break the $1,000 down. $200 is interest expense that the bank keeps forever just because they gave you a service of lending you the money. When I click to the next line, QuickBooks always tries to balance the transaction by taking the total and subtracting what was already put on the first line. But the next line is not $800. How much is our next one? Insurance is only $100. So we're going to change this to $100, and we're going to say 100 of this $1,000 is insurance expense. Then, of course, the taxes are in an account called Tax Expense Real Estate School. And the amount on the statement that says $150 is the amount that goes to the taxes. So we have, of the $1,000 we're paying, $200 goes to interest, $100 goes to insurance, $150 goes to taxes for real estate school tax, and sometimes these two can be lumped together in one expense account called escrow expense, and then the remaining amount actually goes to the long-term liability for that particular mortgage, and QuickBooks knows the remaining amount is the amount of principal reduction. And that's the way I suggest you do it. I suggest you put in the other three or the other two first so that QuickBooks can subtract the other three or the other two from the total up here that you're paying in order to get you the amount of principal reduction for this particular payment. Now, when we click Save and Close, we can look at all four of these accounts in the trial balance. So we click here to open it, and you can see Chase Bank has gone down by $1,000 because that's the account we paid from. What else changed? Well, the mortgage, the Chauncey Street mortgage that we're looking at here, if we double click, we can see that the amount of the mortgage originally was $170,000, but because we made a payment of $550, remember it was that $550 that actually decreased the balance from $170,000 to $169,450, because only $550 out of the $1,000 payment reduced the balance of the mortgage that we owed. You can also see that insurance expense showed up for the first time as $100. When we double click, we see it came from the check that we just made. And of course, tax expense, which is down here for real estate school, showed up for the first time as $150 because that's the amount of taxes that came from that check. So you can see by recording it in the way that I showed, QuickBooks will distribute the numbers to your accounts correctly.